हेलो बच्चों, आपका स्वागत है हमारे यूट्यूब चैनल में। आज हम शुरू कर रहे हैं क्लास 12 अकाउंटेंसी लेसन फर्स्ट फंडामेंटल ऑफ पार्टनरशिप। ये पहले भी हमने 5 क्लास में बताया था। आज इसका फुल डिस्क्रिप्शन शुरुआत से लेके लास्ट तक। दिस इज द ओवरऑल रिव्यू ऑफ दिस चैप्टर। First of all, we know about partnership. The definition of partnership is given under Indian Partnership Act 1932, Section 4. According to this, partnership is the relationship between two or more persons to carry a business and sharing the profit or loss of this business. This business may be carried by all of them or any one of them acting for all. It means it is not essential that every partner take active part in the business. Business may be run by all the partners or any one partner can participate in the management of business. Both the things will be applicable. All the partners can actively participate in the management of business, or business may be run by only one partner. This definition is given by Indian Partnership Act 1932, Section 4. Thereafter, we know about characteristics of partnership or features of partnership. The first feature of partnership business is two or more persons. In the partnership business, the minimum number of partners is 2. Indian Partnership Act 1932 does not restrict the maximum number of partners. But according to Indian Company Act Rule 10 2014, the maximum number of partners in the partnership firm will be 50. तो minimum 2, maximum 50. लेकिन this restriction of 50% is given by Indian Company Act. Indian Partnership Act 1932 does not restrict the maximum number of partners. Second, agreement. There must be an agreement between partners. This agreement may be oral agreement or may be written agreement. The written agreement between partners is called partnership deed. Written agreement considered much better in compare of oral agreement, because oral agreement can create dispute among partners in the future. In compare of oral agreement, written agreement considered much better. The written agreement between partners is called partnership deed. Third, existence of business. There must be a business between partners, and this business will be a legal business. If the partners are doing any illegal business, then it is not called partnership. Business should be legal, and the objective of the business is earning profit. If the profit motive is missing from any business, then it is not called partnership. Fourth, sharing of profit. The main object of the business should be earning profit, and this profit must be shared by the partners in their profit sharing ratio. Besides profit, loss will be also shared by the partners in their profit sharing ratio. Next, relation of principal and agent. Every partner is an agent as well as principal of his firm. As an agent, he can bind other partners with his act, or as a principal, he can be bound by the acts of other partners. It means every partner is an agent as well as principal of his agent. Next, business may be carried by all of them or any one of them acting for all. It means in the partnership business, it is not essential that every partner take active part in the business. Business may be run by only one partner or all the partners can actively participate in the management of business. One more characteristic, that is unlimited liability. The must drawback. Unlimited liability in the partnership business, the liability of the partners are unlimited. If the business involved in the loss, a firm involved in the loss, in that case, the personal assets of partners can be also used for the payment of firm's liability. Next, no separate existence. In the case of partnership, there is no difference between partners and partnership firm. Both are considered same. Rules applicable in the absence of partnership deed. If there is no partnership deed between partners, it means the agreement between partners is oral agreement. So in the case of oral agreement, the following rules of Indian Partnership Act 1932 will be applicable. The first, profit sharing ratio. Profit or loss will be shared by all the partners equally. Interest on capital. No interest is charged on capital. Interest on drawing. No interest is charged on drawing. Salary to partner. No salary, no commission is given to any partner for the participation in the management of business. Interest on loan. Either partnership deed is or not. Interest on loan must be given at the rate of 6% per annum. Either partnership deed is or not. Admission of a new partner. Without consent of all partners, no new partner is admitted in the partnership firm. Each partner can participate in the management of business. Each partner inspect the books of account anytime and take a copy of the same. So these rules are applicable in the absence of partnership deed or in the case of oral agreement. Partnership deed. We know there are two types of relation between partners. These agreements are called oral agreement or verbal agreement, and second is called written agreement. So the written agreement between partners is called partnership deed. And written agreement considered much better in the compare of oral agreement because future dispute among partners can be easily resolved with the help of written agreement. Contents of partnership deed. Following things are recorded in the partnership deed. These are not fixed. These are depend upon the partners. If the partners think that there may be a reason for dispute among them in the future, then that points are recorded in the partnership deed. Generally, we recorded the following points in the partnership deed. First, name and address of the firm. Second, name and address of the partners. Third, the type and nature of the business the firm proposed to do. Fourth, amount of capital to be contributed by each partner. Next, interest on capital. How much interest is charged on capital? Yeah, what is the rate of interest on charging capital? Drawing. How much amount can be withdrawn by the partners for his personal use? Profit sharing ratio. In which ratio profit or loss will be shared by the partners? Interest on drawing. Whether interest will be charged on drawing or not. And when interest is charged on drawing, then what is the rate of interest on drawing? Salary. Whether any partner is given to salary for participate in the management of business. Then how much? That amount. Goodwill. What are the methods of valuation of goodwill at the time of admission or retirement of a partner? Next, accounting period of the firm. From which date the firm begins his accounts. That is, this period will be from 1st April to 31st March. Generally, all the firms start their books of account from 1st April and ends on 31st March. Method of recording partnership practice. Auditing. Whether the firm is audited their accounts or not. Date of commencement of business. मतलब किस डेट से फर्म अपना बिजनेस स्टार्ट करें. ड्यूरेशन ऑफ पार्टनरशिप. फॉर विच पीरियड, फॉर हाउ मच पीरियड पार्टनरशिप इज established. Use the decision of Garner versus Murray rule. This rule will be applicable when any partner become the insolvent. In the case of insolvency of a partner, Garner versus Murray rule will be applicable or not. Bank account. Whether the firm open a bank account by his name or in the name of partner, and which bank this account is open. Rules to be followed at the time of admission of a partner. Rules to be followed at the time of retirement of a partner and settle their accounts. And last, settlement of dispute. If any dispute arises between partners, then who can become the arbitrator for the solving of dispute among the partners. So these are the contents of partnership deed which are recorded in the partnership deed, but these are not fixed. These things are dependent upon the partners. If the partners thinks that these are the reason, these are the points for the disputes among them in the future, then all these points are recorded in the partnership deed. Interest on drawing. Drawings means the amount of goods or cash which is withdrawn by the partners from the firm for his personal use. The firm charge interest on such amount of drawing, so that no partner can withdraw maximum amount from the firm for his personal use. If the firm charge interest on drawing, then this amount of drawing is shown in the credit side of PL appropriation account and debit side of partner's capital or current account. See, methods of charging interest on drawing. There are two methods for charging interest on drawing. First is simple method and second is product method. First is simple method. In the simple method, we calculate interest on each amount of drawing separately. This is a lengthy process, so generally we do not use simple method for calculating interest on drawing. If we calculate interest on drawing by simple method, then the formula for calculating interest on drawing is as follow. Interest on drawing is equal to amount of drawings into rate of interest upon 100 into period by 12. And next, product method. In the product method, we calculate interest on all amount of drawings jointly. Generally, we use this method for calculating interest on drawing. The formula for calculating interest on drawing under product method is interest on drawing is equal to total of product into rate of interest upon 100 into 1 by 12. Product is equal to amount of drawings multiplied by period or months. Amount of drawings multiplied by periods or months. This is equal to product. Interest on monthly drawing. If the partner withdraw a fixed sum of money from the firm for his personal use regularly, in this case, we calculate interest on such amount of drawing as follows. There are three methods for this. First, if the partner withdraw a fixed sum of money from the firm at the beginning of every month. In this case, interest on drawing is equal to total amount of drawing into rate of interest upon 100 into, on this place we write 6.5 by 12. If the partner withdraw a fixed sum of money at the middle of every month, in this condition, interest on drawing is equal to total amount of drawing into rate of interest upon 100 into 6 by 12 on this place. If the partner withdraw a fixed sum of money at the end of every month, interest on drawing is equal to total amount of drawings into rate of interest upon 100 into 5.5 by 12 on this place. This is the question जो हम पहले डिस्कस सॉल्व करवा चुके थे. Methods of recording partnership transaction. Recording of partnership transaction. Partnership transactions are recorded on the principle of double entry system. In the case of sole proprietorship firm, we prepare trading, PL and balance sheet. Like sole proprietorship firm, in the case of partnership concern, we also prepare trading account, PL account and balance sheet. The difference between these two, in the case of sole proprietorship, profit is gone in the pocket of sole proprietor only. But in the case of partnership firm, the profit of the firm is distributed among partners in their profit sharing ratio. In the case of firm, for recording partnership transaction, we prepare two accounts. First account is called PL appropriation account and second account is called partners capital account. First account is PL appropriation account. PL appropriation account is an extension of profit and loss account. With the help of PL account, we know what is the profit or loss earned by the firm. But with the help of PL appropriation account, we know how this net profit or loss will be used by the firm. The format of PL appropriation account is as follows. First, by profit and loss, that is net profit transfer from PL account. By interest on drawing. These two things are shown in the credit side of PL appropriation account. In the debit side, we shown to PL net loss. Then to interest on capital, then to partner's salary, partner's commission, transfer to reserve, and balance of profit is transferred to partner's capital or current account. If the partner's capital account is fixed, then the profit is transferred to partner's current account. If the capital account is fluctuating, then the profit is transferred to partner's capital account. Second account that is prepared by us is called partner's capital account. In the case of partnership, there is a separate capital account for each partner. The capital account of partner are classified into two parts. First is called fixed capital account and second one is called fluctuating capital. First, fixed capital account. In the case of fixed capital account, the original capital invested by the partners in the firm remain constant or fixed. It is not changed time to time. And all entries relating to drawing, interest on drawing, salary, commission, PL appropriation, profit, etc. are transferred in a newly opened account. This newly opened account is called current account. In other words, we can say that in the case of fixed capital account, we prepare two accounts. First is called partners capital account and second is called partners current account. The format of partners capital account and partners current account is as follows. First of all, by balance BD means opening balance. Second, by cash or bank means additional capital introduced by the partners in the firm. In the debit side, to cash or bank, permanent withdrawal of capital by the partners from the firm, and last one is to balance the difference between debit and credit. Second, partners current account. It is very easy to prepare partners current account. The items which are shown in the debit side of PL appropriation account, these items are shown in the credit side of partners current account, and the items which are shown in the credit side of PL appropriation account are shown in the debit side of partners current account, excluding reserve and net profit. These things are not shown in partners current account, and all other items which are shown in the debit side of PL appropriation account, which is transferred to partners. That is first by balance BD means opening balance of current account credit, or to balance BD means opening balance of current account debit. Then to interest on capital in the period preparation account, in the partner's current account, by interest on capital, by salary, by commission, by profit and loss appropriation, sharing of profit. In the debit side, two things: drawings, interest on drawings, or to PL in the case of loss, and to balance CD, difference between credit and debit, or by balance CD, difference between debit and credit. Then next, fluctuating capital account. In the case of fluctuating capital account, the original capital invested by the partners in the firm not remain constant. It is changed time to time. And all interest relating to drawing, interest on drawing, salary, commission, PL appropriation, etc. are transferred in the capital account itself. In other words, we can say that in the case of fluctuating capital account, we prepare only one account, or if we merge capital or current account, then we find fluctuating capital account. The format of fluctuating capital account is as partner's current account. First of all, by balance BD means opening balance of capital. By interest on capital, by salary, by commission, by bill appropriation, sharing of profit. Either to balance BD means opening balance of capital, to drawings, to interest on drawing, to profit and loss appropriation in case of loss, and to balance CD, difference between credit and debit is called to balance CD. Next, difference between fixed capital account and fluctuating capital account. First, number of accounts. In the case of fixed capital account, we prepare two accounts. First is called capital account and second one is called current account. But in the case of fluctuating capital account, we prepare only one account. This account is called इसमें दो, इसमें one. Change in capital. In the case of fixed capital account, there is no change in capital account except permanent withdrawal of capital or additional capital invested by the partners in the firm. But in the case of fluctuating capital account always change or change time to time. Closing balance. The balance of fixed capital account always show credit balance. But current account balance may be debit or credit. Fluctuating capital account may show debit or credit both balance. Adjustment. In the case of fixed capital account, all adjustment relating to drawing, interest on drawing, salary, commission, profit and loss, appropriation, etc. are shown in a newly opened account. That account is called current account. But in the case of fluctuating capital account, all these adjustments are shown in the capital account itself. So these are the difference between capital account and current account. फिर ये क्वेश्चन जो है सॉल्व हमने पहले ही करवा चुका है, तो ये आपको पार्टनरशिप का ओवरव्यू था कि व्हाट इज पार्टनरशिप, व्हाट आर द कैरेक्टरिस्टिक्स ऑफ पार्टनरशिप, रूल्स एप्लीकेबल इन द एब्सेंस ऑफ partnership deed. Here what is partnership deed? What are the contents of partnership deed? Interest on drawings. There are two methods of interest on drawings: simple method and product method. Here interest on monthly drawings. It is calculated by three ways. If the partner withdraw a fixed sum of money at the beginning of every month, if the partners withdraw a fixed sum of money at the middle of every month, if the partners withdraw a fixed sum of money at the end of every month. Thereafter, recording of partnership transaction. For recording of partnership transaction, we prepare two accounts. First is called PL appropriation account and second one is called partners capital account. PL appropriation account is an extension of profit and loss account. Partners capital account may be classified into two parts: fixed capital account and fluctuating capital account. In the case of fixed capital account, we prepare two accounts. First is called capital account, second one is called current account. But in the case of fluctuating capital account, we prepare only one account. That account is called capital account. If nothing mentioned in the question, then we treated that capital account is fluctuating capital account. Or if in the question it is mentioned to prepare only capital account, not current account, then capital account is fluctuating capital account. or if the question it is mentioned to prepare capital and current both account, that means capital account is fixed account. तो ये आपको हमारा ओवरव्यू था अबाउट पार्टनरशिप। अगर आपको इसका पीडीएफ चाहिए तो आप हमारे चैनल को लाइक करें, सब्सक्राइब करें और बेल आइकन दबाएं, तो मैं आपको जो भी पीडीएफ है पार्टनरशिप का वो सारा डिस्क्रिप्शन में डाल दूंगा, वहां से आप लोग डाउनलोड कर सकते हैं। लेकिन इसके लिए आपको पहले हमारे चैनल को लाइक सब्सक्राइब करना होगा और बेल आइकन दबाना होगा, तभी आपको हम पीडीएफ प्रोवाइड कर सकते हैं। और किसी भी स्टूडेंट को अगर कोई डाउट है जो उसको यहाँ से नहीं समझ में आ रहा है तो वो डिस्क्रिप्शन या कमेंट में वो इसको लिख दे कि हमें ये चीज़ नहीं हो रही, तो फिर से मैं उसको नेक्स्ट डे बता दूंगा। लेकिन आपको तभी ये चीज़ें समझ में आएंगी जब आप रेगुलरली मेरे साथ क्लास में जुड़े रहेंगे, पर डे हम नेक्स्ट जहाँ पे ख़त्म करेंगे फिर वहाँ से शुरू करेंगे। ये पहले 5 दिन का है जो हमने देखा था पार्टनरशिप में, क्या है पार्टनरशिप, क्या कैरेक्टरिस्टिक्स है पार्टनरशिप की, क्या रूल्स अप्लीकेबल होते हैं अगर कोई पार्टनरशिप डीड नहीं है, फिर पार्टनरशिप डीड क्या होती है, पार्टनरशिप डीड में क्या क्या चीज़ें लिखी जाती हैं, फिर हमने देखा था कि इंटरेस्ट ऑन ड्राइंग कैसे कैलकुलेट करते हैं, कौन कौन सा मेथड है, सिंपल मेथड, प्रोडक्ट मेथड, फिर कैसे देखा कि पार्टनरशिप ट्रांजेक्शन को कैसे रिकॉर्ड करते हैं, इसके लिए 2 अकाउंट बनाते हैं, पे एप्रोप्रिएशन अकाउंट और पार्टनर्स कैपिटल अकाउंट। पार्टनर्स कैपिटल अकाउंट को भी 2 पार्ट में डिवाइड करते हैं, फिक्स कैपिटल और फ्लक्चुएटिंग कैपिटल अकाउंट। अब इसमें 2 चीज़ें और है पार्टनरशिप में, एक तो है गारंटी ऑफ मिनिमम शेयर ऑफ प्रॉफिट और दूसरा एडजस्टमेंट इन क्लोज्ड अकाउंट्स। तो ये 2 चीज़ें हमको और अभी जानना है जिसको हम अगली क्लास में आपको बता देंगे। लेकिन जिस बच्चे को भी नहीं समझ में आ रहा है वो कमेंट में ज़रूर लिखें ताकि उसको फिर से बताया जाए, और जिसको भी पीडीएफ चाहिए उसके लिए उसको हमारे चैनल को लाइक सब्सक्राइब करना होगा, तभी उसको पीडीएफ में हम दे सकते हैं।